Welcome back to the second part of our deliberations on GST audit under Section 65. Section 65 of the GST Act deals with the departmental audit, and two important areas to deliberate today, that is when this audit is triggered, and second, if audit is triggered, then as a employee, as a practitioner, as a professional, as an employer, what actions you need to take so that there is no additional demand and you can come out with a clean slate in this area. Now, the most important question which as a client or as a professional in GST you should like to know, when this audit is triggered. This audit is triggered in certain cases, in certain circumstances. We have recorded around 18 such cases where audit could be directed by the department. What are the major? I am not going to discuss all 18, and as I have said, those who want complete information, they can write to us. But I will tell you the major part where they find a big difference between EOA bill figure and 3B figure in respect of turnover, taxable turnover. If they find that there is a difference between turnover, taxable turnover declared by you in 3B and declared in the audited statement, final accounts, then obviously they would like to know why this big difference. If it is found that your value addition has abruptly come down, say you had a value addition of 25 or 30%. Value addition means contributions. That is sales minus raw material cost. Say your value addition was around 30%. Now all on a sudden it has reduced to 20%. Could be a reasonable cause. If it comes down from 30% to 20%, that means output tax is also reducing, because GST is based on value additions. If your value addition comes down, then output tax will also come down. So they are concerned about two important things. One is the value additions. If there are abrupt changes, or if there is a difference between your ITC claim and 2A and 2B differences. If they find that the ITC as per 2A or 2B is distinctly different and you have claimed a higher ITC in 3B, then obviously there is a revenue impact. And these informations are readily available today because all informations are available on a digital platforms. They can easily calculate what is the today's sales and what is the today's ITC credit. Because of EOA bill, they know what is the output tax, what is the input tax. If they find through artificial intelligence that there is a big gap, there will always be a gap, then certainly they will look into. Third, where you are getting refund under inverted duty structure. You know, the inverted duty structure, the rate of tax, input tax is higher than the output tax. So as a result, there is a refund. There could be also refund on account of the exports. So where refunds have already taken place, department would like to see, if the refund amount is quite large, to see that there is no revenue leakage in the form of giving a refund. Fourth, where you have multiple branches and materials are going from one unit to another, and there is a one area debit, another ITC is credit, and also where there are a lot of related party transactions. Related party transaction is very, very important from income tax point of view and also from indirect tax, that is GST point of view, and also from customs. This is a very important area. So where there are transactions within the group companies, subsidiaries, associate companies, obviously there is a need to go through valuation mechanism and compliance part. Fifth, where there are transfer of materials to the job worker. There are companies where you will find 70% of the materials are being processed by the job worker. Only 30% manufacturing is taking place. There are very big companies with a strong brand name. Their raw materials are being sent through delivery challan. Materials are to come back within the statutory period of 1 year. In case of raw material, capital goods 3 years. Whether materials have come back, whether there is any input-output difference. You have sent 100 kg, returned 90 kg. What about 10 kg? Is it coming under normal process loss or it is more than normal process loss? If it is more than process loss, there is a question element of revenue, because you have transferred those materials to the job worker without payment of any duty. Whether any material is lying with the job worker which is more than 1 year, if so, whether reversal of duty has taken place or not. So these are the transactions which might trigger your section 65. To summarize, where you have a large amount of turnover, that could be one reason. There is a difference in value between 3B UA bill figures, where there is a ITC variance between 2A, 2B and 3B. 3, where company has multiple branches, and 4, where there are multiple transactions with the job worker. In those cases, there could be a trigger for GST audit under section 65. Now it has triggered. You have received the notice. How will you keep yourself ready to face the audit, which is very important? In fact, this is more important. I have 15 steps suggestions. Again, I will not refer all 15 steps, but I will give you the major steps which you should take well in advance. Again, I repeat that you have not to wait to get section 65 audit notice. At the time of annual balance sheet finalizations, I presume the auditor should require at least these informations. which will help you for Section 65 audit. So if you get those reconciliations, which I am going to refer, it will be great help to all of you. Number one, reconciliation of turnover between your audited accounts and 3B figure and GSTR 9 and 3B versus EOA figure. These two reconciliations are first and primary. Again repeat, reconciliation of turnover between your audited accounts appearing in the profit and loss and taxable turnover and other turnovers exempted as shown in the 3B. This should tally. If there is a difference, why there is a difference? There are many reasons for which differences. Like inter-unit transfer. Inter-unit transfer is not considered as turnover in the audited accounts, but it is considered in 3B. Because when you transfer materials to your one branch to other, you have to raise the invoice. So 3B figure will always be more than audited accounts. But that reconciliation has to be done. Mere stating the reason is not enough. Next. 3B figure versus EOA figure. I am talking all outward supplies. Then ITC 2A 2B versus 3B. These three reconciliations should be kept ready not only for the departmental auditor but also for the statutory auditor. I think statutory auditor should ask for these reconciliations. Next, as I have explained, that reconciliation of input or output from job worker has to be kept ready. Third, ITC reconciliation, 3B versus 2A 2B, as I have already said. Fourth, block credit. There are certain credits which are not available under GST, under Section 17 of the GST Act. One of the most important expenses which are not allowed, like foods, beverages. Then any expenditure on immovable property. In this area, repairing to building, painting to the building are very, very important. These are all common expenses in any organizations, particularly manufacturing. So your computer system should be such so that at the time of taking entry, these inputs are not considered as ITC. It will be considered as expenses or capital expenditure as the case may be. The system should be made that ITC is not taken into account for the purpose of GST compliance. So this is a very important area. Next area, you have to see whether all reverse charge credit has been taken, that is one, and two, whether all expenses which are under reverse charge has been considered. In one case I have signed that sponsorship, the responsibility for GST on sponsorship rests on sponsorer, not the person who is getting the sponsorship. but neither company has paid or charged to the sponsor, nor sponsorer has paid by way of reverse charge mechanism. These are the areas, advocates' fees. These are the areas it can be easily checked. Department can always see the legal expenses and say, you give me a list, and then they will see whether RCM is considered or not. Similarly, say for example, director's sitting fee. There is always a separate head for director's sitting fee. They will take the entire list of the director's sitting fee and calculate whether RCM has been taken into account. These are the major areas you have to be sure that these are all absolutely okay. And for this purpose, we always suggest that you make a team of 2 or 3 members once audit is declared, so that audit team can concentrate on the requirements of the department on a one-to-one case and reply all requirements, submit all documents. Our objective will always be to see that there is no additional demand, there is no penalty, and there is no interest in the show-cause notice. So whatever I suggested, if you take those points into consideration and prepare yourself, I am reasonably sure that you can avoid additional demand from the department. Friends, our objective is to basically protect the clients, protect the employer, and to be compliant at all the times. We'll come out with many such videos, not only on GST, but on foreign trade, FEMA, FDI, corporate governance, corporate law, and most importantly, on macroeconomic issues. Like the next one, we will come on a specific subject called inflation, which is a major issue not only to India, but being faced by all the countries in the world. If you like this video, I have 3 requests. 1, you like it. 2, you share it. And 3, you subscribe it so that you get our all videos immediately once we upload it in YouTube format. We need your support, and it is our objective not only to take care of the tax professionals or tax practitioners, but also to take the academicians, students, general public to understand various issues, and more importantly, the macro-related issues which affects everybody positively or negatively. Thank you very much for your patient hearing. Again, I will request you to let me know your views about these deliberations, and if you want any specific point to be discussed in our future deliberation, please do write to us, and our WhatsApp number is 9331042424. Thank you very much.